Hello and welcome to another edition of CMS Forex News. My name is Andrew Pang and today's Thursday, October 2nd, 2008. In Australia, the trade balance for August swung to a 1.36 billion Australian dollar surplus. Exports rose 6% while imports were down 2%. Trade should continue to help support the rest of the Australian economy, which is in a slowdown, forcing the RBA to go on a rate-cutting campaign. Despite the favorable trade data from Australia, the Aussie yen pair fell for a second session. From its intraday high near 84.15, the pair was trading below 82 in the New York session. The sharpest fall came during the European session as investors dropped high-yielding currency in a flight to risk aversion. In the UK, housing prices fell 1.7% for the month of September, the 11th straight month of declines. The annual decline of 12.4% is the largest for the index since the series began in 1991. There is no bottom to be seen yet, but there is a glimmer of hope in that price declines are decelerating in the past few months after accelerating for the first half of the year. The UK construction PMI fell to 38.8 from August's 40.5 and shows a rapid deterioration in industry activity. The pound-yen pair, another favorite of carry trade, continued its decline this week against the yen, falling almost 300 pips from its open to test 184.75 in New York trading. Since the start of the week, the pair is down about 1,000 pips. With housing continuing to worsen, the Bank of England will have to think about lowering rates. The pound fell for the fourth straight session against the dollar as well to test 1.7550. In the Eurozone, the producer price index declined 0.5% on the month and 8.5% on the year in August, which matched expectations. The figures reinforce the belief that inflation has peaked. The ECB decided to hold rates steady at a 7-year high of 4.25% in order to curb inflation, even as recent events have shown that governments on the continent have had to take emergency action in order to limit the fallout from the credit crunch. With the risk to growth growing as a result and inflation cooling, the ECB will be hard-pressed to keep rates at their current levels going forward. The Euro-US dollar pair fell below 1.38, a 13-month low for the pair, during Trichet's press conference. In the conference, he said risks to consumer inflation were declining, but that the ECB was still concerned about second-round effects like labor costs rising. Still, the market took his comments as a sign of softening bias for the ECB. Overnight, the Senate passed their version of the $700 billion rescue plan, and it heads back to the House to be voted on again by the end of the week. The Senate added a higher FDIC cap and tax breaks to help sweeten the deal to convert dissenting members of Congress. In the U.S., jobless claims remain close to 500,000, with the week ending September 27th showing a fresh 7-year high of 497,000. About 45,000 of those claims are a result of job losses due to recent hurricanes in Louisiana and Texas, but even without those, claims remain at a high level as the economy faces pressure from the recent financial turmoil on Wall Street. U.S. factory orders fell 4% in August, more than expected, another signal that U.S. manufacturing and the overall economy is weak. July's positive figure was revised down as well. The broad-based headline drop was the worst since October of 2006. Combined with yesterday's dismal ISM manufacturing index, it is apparent that U.S. manufacturing is hurting in the face of higher credit costs and slowing demand. The weak jobless claims dampened the mood on Wall Street and stocks were deep in the red. The Dow Industrials were off 2.5%, S&P slumped 3%, and Nasdaq was down 3.2% as of 2:30 p.m. Eastern. The dollar-yen pair gave up its gains from yesterday and was trading near 105.30, with most of the fall coming overnight. The U.S. dollar-Canadian dollar pair continued climbing this week, testing 1.08 in New York trading. With commodity prices lower and the new wave of the credit crisis in the last 2 weeks, there is now increased speculation that the Bank of Canada will cut rates on October 21st. Tonight, Australia posted services PMI and the TDMI inflation gauge. Overnight, Switzerland releases its CPI data and the Eurozone posts retail sales. Both the Eurozone and the UK revealed data on services. Tomorrow, the U.S. has its ever-important non-farm payroll report and the ISM non-manufacturing index. And that wraps it up for the day in Forex News. Join us again tomorrow right here at cmsfx.com.